Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York on Tuesday, March 29th, 2016, and this is the Daily Report for Gold and Silver. Following dovish statements made by Janet Yellen today, we have a double move to the upside, both the equities markets trading higher on the day, as well as the precious metals complex. To gold, we did issue a buy signal this morning. We'll go into that when we pull up our first chart. But as you can see, we're currently trading roughly at 1241, just off of a high of 1243. Low on the day has been 1215. So traders, we do have the market trading right now roughly at 1242.60, putting it up about $22 on the day. Almost a 2% gain. We did send out a special trade alert this morning recommending that all subscribers get long the gold market. Traders taking that call got in at roughly 1238 with a stop just below 1217. Now, as I'm sure you're well aware of, we did have Janet Yellen come out and make a statement today in which she expressed caution in raising interest rates, and therefore we got not only a strong upside move in the precious metals, but also in U.S. equities. And the one thing that suffered tremendously and has been over this last month has been the U.S. dollar. Time permitting, we will take a look at a U.S. dollar chart. But first, I want to go over our current count and the way that we're looking at the potential for this current trade. Now, as you're aware of, we are under the belief, our current model is looking at a completion of a 5 count, 1, 2, 3, 4, and 5, and this completes a 1. Now, just following the completion of this 1, and realize that we're going to get a 1, 2, 3, 4, 5 count to look at our sub count that is on our longer chart, and we'll go ahead and pull that up in a second. But from the conclusion of this 1, meaning 1 through 5 here, I believe that we went into this very, very short-term 2, which I also believe was comprised of an A, a B, and I believe that we concluded our C just yesterday when the market hit an intraday low of approximately 1206. If you recall from our models over the last couple of weeks, we were anticipating the market to sell off, and our forecast in terms of where we thought the market would sell off to was between 1195 and 1205. So when we hit that 1206 the other day and really popped off of it, in other words, we saw a lot of support come into the market on this candle right here, and that of course was yesterday. That's what really led us to believe that there was a distinct possibility that we had seen the bottom of this market short term, and more importantly, we're on the doorsteps of possibly going into a wave 3. Now, so traders, really to bring that all into perspective, I've gone ahead and pulled up our daily chart that has our major count. Of course, we haven't compressed it enough. Here we have our wave 2, wave 3, 4, and then we start our 5 with the 5 count. 1, 2, 3, 4, and then this concludes our 5th wave, our intermediate 5th, as well as our A is completed. We're now in B. And as I said, I believe that we have now completed wave 1, which is what we just looked at, and then that ABC that we looked at on that daily chart was just completed, and that's this 2. So this is a subcount 2 that I believe we have just completed. If that is correct, we are now entering a subcount 3, and a subcount 3 should most definitely take us over $1,300 per ounce, and that's really the move that I am anticipating. And in terms of my upward strategy and exit strategy, I should say, I'm looking at the potential to see gold trade back to and above $1,300 per ounce. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.